Hey guys, welcome back. This is Dan Frio, the Mortgage Update. Today we're going to talk about the normal phone calls that I get on a daily basis from YouTube viewers, people that hear me on the radio, about the mortgage process. It's not that difficult. Here's how most of the conversations start out. Dan, I have a unique situation. Okay, that's normally the kind of what I get when somebody calls. So stay tuned. We're going to go over what your common questions are that you ask, and I'm going to walk you through exactly how this process takes place and why sometimes you get turned down that you shouldn't otherwise be turned down. So stay tuned. If you like the video, please don't forget to give me a thumbs up. Click down below, subscribe, hit that bell over there as well on one of these sides to make sure every time I post a video that you get alerted. So stay tuned. We'll be right. So let me pull the curtain back kind of and show you behind the scenes what's done as a loan officer and in the mortgage process. Okay, so first of all, we need an application. All right, so the application consists of three major parts. The first part is the information to give us that we can access your credit report or credit scores. The next section we go over is your income and your job information. And the next piece is your assets. Okay, those are the main pieces of the puzzle. So I'm going to kind of condense this a little bit, and then what I'll do is I'll post some other videos to break down, we're going to dissect your income thoroughly, because you might not realize or understand what income can be used, what income can't be used. Job times, do you have job gaps? Do you have seasonal employment? Do you have commissions, bonuses, things like that? Can it be counted? So I'm not going to go in that detailed in this video, but I just want to show you, kind of behind the scenes on why many times people get denied that can really get approved. Okay, so I'm going to dig in further on this. So, okay, we get those pieces of the puzzle. We get your information to pull your credit. We go over your employment and your income, and then your assets. So we put all that system or all that information into our system, and it's a mortgage application or in mortgage software. Then it doesn't matter if you use me as the loan officer, somebody to Quicken, Wells Fargo, Bank of America, Guaranteed Rate, whomever you use. We use a mortgage system, one of two or three. We put all the data in there, and then we upload your information into one of two entities. It is Fannie Mae or Freddie Mac. Now, they do probably 90 to 95% of the mortgages in the country. Some of you might say, well, they're bad. Well, they're not bad. If it wasn't for them, there would be no mortgages basically from 2008 to 2010. Okay, so now we upload your information into that system. Okay, it's a computer system that reads your data. It'll then kick out, it'll say the loan is approved, or the data is approved, or the data is referred. It won't say that you're turned down. Okay, so this is huge, because if the data is inaccurate, then your approval is really no good. So if you do the online applications, it kind of scares me, because do you know what income can be counted? Do you know if you have job gaps, can that income be counted? Do you know precisely, can you use gross income, net income? Things like that you might not know. You go in and you plug in that data, 30 seconds later you have a pre-approval. I wouldn't bank on that. So when people do an application on my website, I call them within 24 hours and go over it with them in detail. So now what happens is, goodness, we got it, we have an approval. Now what? Okay, so now we go back to the client and say, okay, we got an approval, but that approval is stating that we need to clear these conditions, or we need to validate the information we put in there. That's where your pay stubs, your W-2s, your tax returns, maybe lease income, your bank statements, all that come into play. So now we take that data and we send it up into a person who is an underwriter of the loan, licensed to do this. Okay, now that person goes in and validates that information. They're saying, well, you said the client makes 50 grand. Last year they made 50 grand, and every month they make enough that it equates out to 50,000. We're good. You said that they have 10,000 in the bank. We have one bank statement. We have two bank statements. They both have a $10,000 balance. You're good there. Okay, that is validating the process. Now here's the area that gets a lot of people into, I'll say it the best way, misconceptions. Okay, here's misconceptions. And I did a video, and I thought this video would be bigger than it is. And I'm going to try to relate it. I'll try to link it down below if I can. But it's called overlays. Okay, overlays are the reasons why you got turned down from XYZ Bank, and then you called me and I got you approved. And you're like, Dan, how do you do that? Here's how I do it, is what is called overlays. Overlays are the biggest detriment in this business. Okay, here's an overlay. The best way I can explain it is, let's say the government comes out and says, all over the whole country, we're going to make speed limits 70 miles per hour. Okay, that is the national, that's the overall guideline for the country. But in Illinois, they came out with a state guideline and said, you know what, in our state, if you're driving, the fastest you can go, our speed limits are going to be 60. That's an overlay, okay? They're overlaying their guidelines, state guideline, over top of the federal guideline. That happens in the mortgage business. So, for example, here's the biggest example I can go over. FHA. FHA guidelines have that you can get a FHA loan down to a 500 credit score. Okay. However, from 500 to 579, you need to put down 10%. So if we run your loan through that automated system, it approves you. You can then get a loan with 10% down. Okay. At 580 and above, FHA allows you to purchase a home or refinance a home, but in most cases you're purchasing a home with 3.5% down payment. Okay, so you're financing 96.5%. Okay, remember that though. 580 is the FHA guideline to go with a 3.5% down program. However, if you have a 599 credit score, I challenge you, pick up the phone and call 10 different lenders and say, I have a 599 credit score and I want an FHA loan. Probably 9 out of 10 lenders are going to turn you down saying, we require a 600. That's the overlay. So that's this, the state came out with that overlay of the speed limit. So that bank did as well. They're saying, we don't want anybody with under a 600 credit score. You might even, don't be surprised if they say, the minimum credit score here for the FHA program is 620. That's their FHA program. That's not the national FHA program. That's the biggest culprit, or the biggest issue that a lot of people face today, is they call one or two big lenders, those big lenders or their credit unions, their local banks that have generic programs, and they got turned down because of their credit score being too low. The next one is your debt ratio. Okay, what your debt ratio is all of your expenses on your credit report plus your potential mortgage payment divided by your gross monthly income. Okay, I'm getting approvals from FHA up to a 57% debt ratio. I'm not saying that's right or wrong, but I'm saying it is happening. However, your lender, and I just actually spoke with someone this morning that they got turned down because their debt ratio was over 50%. Well, that's that bank's or credit union's overlay. It wasn't FHA's overlay, because FHA will approve you up to a 57% debt ratio. Those are the two biggest issues why many people get denied who otherwise should be approved. So that's why I'm a mortgage broker. We deal with over 20 lenders. The reason why I deal with over 20 lenders is some are phenomenal with FHA scores of 500. Some of the lenders I have won't do it. That's how I know that some require a 600 or 620 credit reports, because I'm set up with some who do in fact that. Some have great VA programs, but they're terrible with the other programs. Some are phenomenal with USDA. Some are great with jumbos. Some have a $100,000 minimum loan amount. Some have a 620 minimum credit score. All these variables come into play. That's why I'm a broker. That's why I highly suggest you use a mortgage broker. We have all these options to you. Also, probably 90% of the time, we're cheaper than going directly to the bank. I had a phone call again this morning. The lady said, you know what, I saw your video. Notice that your fees, you state that your fees are less than everybody else. I need you to prove it. My total fees to her were $789 compared to $3,200 at another place. My rate was 0.125 lower. That's fact. So these are the reasons why, I stress, please reach out to me if you're in Illinois. If you're not, I'd love to help you anyways. To at least try to find you a place to deal with. So this is how many people are getting turned down, or why many people are getting turned down that should be getting turned down. And that's it. So if I can be of any help, please let me know. Reach out. Please comment down below. Give me some ideas or ask me any questions. I reply to every question that's on there. Please, like I said, don't forget to give me a thumbs up, subscribe, click the button down here, and that helps out many other people. Your situation, I can guarantee you, is not unique. And there's many out there that have your similar situation. And by you posting something, or at least sharing this video or subscribing, we're getting the word out to more and more people. So I hope you like the video. I hope we'll be a bit of assistance to you. Subscribe to my channel, reach out to me, shoot me an email, give me a phone call. God bless, have a great day, and see you next week.